Today we'll be discussing about support and resistance. Just support and resistance. And in this discussion, I'll take you through practically so that you can understand support and resistance practically. So the first thing for you to know is to understand what is support and what is resistance stand for. Supports represent demand zone. All of you know about that. Support represent demand zone. It's where buyers put their position or trigger their position in the market. Resistance represents supply zone. It's where sellers put their position or trigger their position in the market. So support and resistance are essential zones, very important zones in the market, because it's where sellers and buyers put their position or trigger their position. If you are a seller, that means you're going to sell at resistance, and if you are a buyer, means you're going to buy at support. We buy at support, we sell at resistance. That's why support, we call it demand zone, and resistance represents supply zone. So what are the things that you are going to learn? These are the things that you're going to learn under support and resistance. We're going to learn how to draw support and resistance line, how to draw, how to identify and draw. I would like to put it in this way: how to identify and draw support and resistance zone. How to identify support and resistance zone, and how to draw support and resistance line. Number two, how to use support and resistance in trading. How you can use support and resistance in trading. Number three, how to identify support and resistance using Fibonacci retracement and extension. Guys, this is very important. You know, Fibonacci retracement and extension is very important in the Forex market because it helps you to automatically identify or show you where support and resistance is. When you draw support, when you draw Fibonacci retracement, the lines, or the areas where those Fibonacci numbers pass, they show you automatically where there is support or resistance. Number four, how to identify dynamic support and resistance using moving average. Remember, guys, we have fixed resistance and support, but we also have dynamic support and resistance. What are those dynamic support and resistance? We'll see in a few minutes to come. Those when we talk of dynamic support and resistance, we are talking about the support and resistance that move with the market, that they are created as the market moves from one point to another. Remember, when the market moves from one point to another, they don't just move straight. They just move in a wave-like. So they create some resistance and support on the way as they go on. So guys, it's very important for you to understand this. And in a few minutes to come, we're going to cover all that. All right, guys, so let's get back now. Number one thing, as I said, remember, number one thing on our topic, or on things that we need to cover today is how to identify support and resistance. And after identifying support and resistance, then we move another step ahead: how to draw support and resistance line. So number one thing, we learn how to identify practically how you can identify support and resistance. And number two, how to draw support and resistance line. That's the two things that we need to cover in the first part. All right, guys. So here we have USD CAD. Let's go to USD CAD or USD Canadian dollar. USD Canadian dollar. Just go direct to, I like to use 4 hours time frame. minimize some noises in the market, to minimize some noises. So if we use 4 hours time frame, we can minimize a lot of noises in the chart, or we can even use daily time frame. So we have 4 hours. We have 4 hours time frame or daily time frame, but I prefer more to use 4 hours time frame because it shows something very clear, as you can see. All right, guys. So in our chart here, you can see we have USD Canadian dollar on 4 hours time frame. 4 hours time frame. And I want to advise you guys, when identifying and drawing support and resistance, I will strongly recommend that you use higher time frames, starting with 4 hours time frame. Starting with 4 hours time frame and daily time frame. For intraday traders, I would strongly recommend for you guys to use 4 hours and daily. 4 hours and daily time frame. It will be very clear for you to see the support and resistance zones. If we use 1 hour time frame, you will see support and resistance, but it will be it will have a lot of noises. You will see a lot of support and resistance there. But if you use 4 hours time frame, you will see something very clear, and it will be very easy for you to move on from there. All right, guys. Now, how to identify support and resistance? Number one thing, guys, that you need to understand is support is a demand zone. So we expect to see support at somewhere below the market, somewhere below the chart. You cannot expect to see support somewhere at the top or above the market. Anything above the market, you see, when we say above the market, we mean what? We mean anything above the current price of the market. Anything above the current price of the market is where you can find your resistance. But anything below the current price, where is the current price? When you look at our pair USD Canadian dollar, the current price is here, guys. This is the current price. The market is acting at this point here right now. So if you are looking for support, we expect to see support somewhere below this area, below this point, below this area where the market is at the point at the moment. So anything somewhere below this area, is where you can find your support. So we expect to see support below the current action of the market, below this price. Now, how do we know this is support and this is resistance and so on and so forth? We know this is support by looking at the behavior of the market. And what's the behavior of the market? Behavior of the market that you are looking at is if there is any rejection. If there is any rejection of the market at that zone, as you can see here, guys, you can see the market just went down, but there was a rejection at this point, pulled up. The market went down, and when it reached at this area here, at this point here, it pulled up. So at this junction here, this junction where the pullback happened, it's where we can see our support. Another point here, you see the market went up and then another rejection back, and we see another rejection at just at the same zone or at the same point, and the market went up. So if you want to draw support, you just draw it right there, guys. Remember, support or resistance is not a point, it's just the area. So don't concentrate more to be more precise, like drawing a line just at the point. It's just, if you draw it there, it represents this pullback here. It also represents this pullback here. So this one represents this junction and this junction here. You see what I mean, guys? This line that we have just drawn here, represent this junction and this junction. So here is where we find support. And why this clear support? Because you can see it's where buyers placed their orders, and you can see the market behaved, and you can see the market went up because we had a lot of buyers at this zone, and they were able to pull the market up because there were a lot of positions for buying at this place, at this zone, and they were able to move the market up. All right, guys. So this is a support. You draw support at this point, at this zone, and if we now move from this point upward, you will find another rejection. Another rejection is at this point. So if we move from bottom to the top, if we find any rejection on the way, we will regard it as a resistance. We will regard it as a resistance because we are looking at it from the bottom. Since we are looking at it from the bottom, that means that rejection will act as a resistance. Remember, guys, we have just drawn the support at this point. Now we are moving from this point upward. On the way upward, we find another rejection, which is this one. The rejection which was created by the market, maybe previously or at the moment. But we can see this was created previously. This rejection was created previously if we consider this the action of the market at this point. So if we move upward, we find another rejection. This is the rejection. So since we're moving from the bottom to the top, this one here, we will define it as a resistance. We will define this one as a resistance. So this is a resistance. Why? Because we are looking at it from the bottom. Now, if we pass this, we move above. If we move above this rejection, now the previous resistance is no longer a resistance. If we look at it from the top or from here, if we look at this rejection from here, this one now is no longer a resistance. Why? Because we are looking at it from the bottom. The previous resistance now becomes support. So we will treat this one, the previous resistance, as a support. Guys, are we together? If we are together, please let me know. Let me know, guys. If we are together, let me know. You can just write something on the chat page if we are together, guys. All right. I can see we're moving together, right? That's great, guys. Now, this is my point, guys. This is my point. All right. This is my point. You can see now the market has moved above this zone, the previous rejection, and the previous rejection. If we look at it from the bottom, it was a resistance. But after we cross it, it becomes a support, no longer a resistance. So the nearby support of the market, if we look at it from the current price of the market, is this one, 1.331904. It's now the nearby support, which means if the market decided to do a kind of retest, it will do a retest at this support, which was previously a resistance. But right now it is no longer a resistance, it is support. Why? Because the previous resistance becomes a support after the market cross over it. I repeat again, the previous resistance becomes a support after the market pass through it or the market cross over it. You can see, we expect a market to do a kind of retest at this support, so, in order to move, in order to continue with an uptrend. So this was meant to explain more about this support. So let's keep moving, guys. Let's keep moving. Where do we find another resistance? Remember, if we want to check for another resistance, if we are looking at another resistance, we just look where there is any rejection of the market in the previous market. So we find it just there. Why? Because you can see the market went down, went up, found a rejection at that point, and went continue with a downtrend here. So this one is a potential resistance which we can expect if the market keep. If you look at this chart, you can see we have some rejection in the market. Have some rejection, some pullbacks and some rejection at some point. Remember, this movement you see in the market, it's not a rough movement. It is mathematically calculated. You might think that it's just a rough movement or some kind of things that are just happening in the market. Guys, the rejection you see in this market, all this rejection are mathematically calculated by the dealers, by the market makers, if I can say. It's not a rough kind of thing that is just happening in the market. It happened by purpose. So you guys, you need to know why is it happening. Remember, guys, when we draw support and resistance, we are just identifying the behavior of the market. The behavior of the market. And what is happening right here, right now, is not something new. When you see this rejection, guys, this rejection that you see, it tells you that the same thing that is happening here right now, it already happened in the previous days. It already happened somewhere in previous days. So it's just a repetition. It's just a repetition. And that's why it's very necessary for you to understand about support and resistance, because it helps you to know what the market is doing and what the market might do in the future at the same area where you have just drawn support and resistance. So, as I said, if you look at the market from the bottom, any rejection above it is a resistance. And if you look at the market from the top, from the top, anything below it is any rejection below it is regarded as support. So, guys, we have drawn a support at this level. We have drawn also a resistance at this level because of this rejection here. If we keep drawing, we take a horizontal line, we just find another rejection somewhere above it. We find another rejection here. This is a resistance. Why? Because we are looking at it from the bottom. You see, guys, if we're looking at it from the bottom, that means it is a resistance. But if we're looking at it from the top, it is a support. Now we keep drawing. We find another rejection. We have this rejection, and another rejection here. So we draw, but we also have another rejection at this point. Sorry, guys, it's very important for you to note this. It's very important. What I'm just going to explain here right now. The lines that we have just drawn, guys, are not just lines. They represent the behavior of the market. They represent what the market has been doing in the previous time and what the market can do in the future. Because the market keep on showing a certain behavior after reaching at these levels, at this area. These are the respected area by the market, if I can say. These are the respected area because we expect the market to do something when they arrive at this area or when they cross at that area. And there is where we find this, we come across something called the retest, pullback, reversal, creation of chart patterns. They all occur at these areas, either support or resistance. Guys, so this is very important. And this is how you draw support and resistance. First and foremost, you just consider the current moment of the market. And we just draw it. Remember, we just started our drawing from this point. We just looked at this point, then we started drawing. We kept on drawing. We kept on drawing until we finished. So we started with the support, then we go to resistance number 1, resistance 2, resistance 3, resistance 3. So we have resistance 1. This is resistance 1. Resistance 1. So this is R1. This is resistance 1. The one down here is support, guys. The one down there is our support. So this is support. This is the resistance 1, resistance 2, resistance 3, 4. You can have as many as you want. So before we proceed now to the next part, I want to know if you guys already understand how to identify support and how to draw support and resistance at this point. Because the next part of it is now how to draw and how now you can use this support and resistance to put your targets, either take profit and stop loss, to set your targets, take profit, stop loss, and where you can find you can find your end, how you can find your end in the market just using support and resistance. Remember, we have people in the world trading just by using support and resistance, and they are making profit in the market. You don't need the entire book of Forex market in the world in order for you to be profitable in the market. You just need some few things that are very necessary, that can suit you, and be able to make money in the Forex market. So I'll stop sharing this screen now and get back to you guys so that I may receive some questions before we proceed in the next part on how now you can use support and resistance to find to find your end and find your target and to set your stop loss in the. So this is USD card as we started with it from the beginning. This is USD Canadian dollar, guys. This is USD Canadian dollar. This is USD Canadian dollar, guys. Now, this part is very crucial. It's very important because now I'm just going to explain. I'm just going to teach you guys how you can trade. How now you can trade using support and resistance. How now you can trade just using support and resistance in the market. And now how you can set your targets, take a profit, stop loss. See guys, this is very important. Remember, we are dealing with 4 hours time frame. We are dealing with 4 hours time frame, and we are drawing our support, resistance using 4 hours time frame. Number one thing. Let's say you just went into the market. This is what I was just trying to say, that right now we are going to see how we can now trade. Using support and resistance. How now you can find your entry, and also you can find your target. Take a profit. You can take a profit. You can set a stop loss, and so on and so forth. All right, guys. So this is support, resistance, and so on and so forth. Now, let's say you just went into the market, and you just had this one. This is support, and you want to trade using support and resistance. So you just draw support here, and you come to draw your resistance at this point. See, this is your resistance. Now, let's now go to the real thing. Let's now go to the real thing. Let's consider what the market is doing right now here. And you want to trade this. Let's say you want to trade USD CAD right now. You want to trade USD CAD right now. You have drawn support here. This is your resistance. But because the market has already crossed it, that means this one becomes support. And this one is your next resistance. Now, if you want to trade USD CAD at this point, at the moment, if you want to trade USD CAD right now, what will you do? Just by using support and resistance, what will you do? Where will it be your entry? You see? Now, you can see this candle here, guys. This candle just went direct, made a breakout at this resistance. It made a breakout, and it just went up to this point. Right now, it's coming back. Now, if this is a genuine breakout, we expect the market to do a retest at this point, and then keep moving up. And I'm very much convinced to believe that this one might be a genuine breakout. Why? Because you can see the market makers reversal pattern at the support. You can see W pattern here. You see this W pattern here, guys. This is a W pattern. You can see W pattern at the support. So the market is moving from the support, but it also have another confirmation, which is a W pattern, which tells you that it's a reversal market, and the market has just done a breakout at this resistance. And what it is doing right now is just what? Retest at this point, and then it will continue moving up. Remember, this is a resistance. This one here is a resistance, but it is also a neckline of this W pattern. Neckline of this W pattern. Why neckline? Because we have this kind. You see this, guys? Have this kind. Have this kind. This is a clear W pattern. It's a clear W pattern. It's a clear W pattern. See, guys? This is what I'm talking about. This is what I'm talking about. It's very, very clear. It's not something that you have to think too much. It's very direct. It's an opportunity that is very direct. You just see the opportunity there for you. Now, if we want to see the kind of retest in a clear way that I'm talking about, just go to 1 hour. When you go to 1 hour, I don't say you draw against support resistance. You just go to 1 hour. You can see this candle here just coming down to do a retest. You can see this candle here moving down to do a retest at this point. Remember, guys, it's not a must for this candle just to come and touch this line. even at this point, the market might decide to continue moving upward. Why? Because this is already a clear retest. This situation you see here, you see the candle just went up, but it also went down at this point. So I can say you can just go to the market right now. You can just place your order into the market right now at the moment. And I can do that right now as well. I can buy this one with confidence. I can buy that one with confidence, and this is my end. Or you can just go in with one order by market execution, and you can just place another order here. Another order you place here as a pending order, buy limit pending order. In case if the market move to this point, just move and do a retest at this point, then you have another order there that will be moving up with the market. But in case the market decided to continue with upward movement from this same point here, you're already in with another order. You see what I mean, guys? You don't miss an opportunity. You don't miss an opportunity. Make sure you don't miss an opportunity. When we draw this line, we are not just representing this price. It's not a price. Resistance or support is not a price. It is an area. This area is an area which represents support now. Why support? Because the market is above it. Why resistance? Because the market is below it. So you have to know about that, guys. Now, your end should be somewhere around that area. In this case, is around this support, which we expect a retest at 80. You see, guys. So it is differ in different scenarios. Remember, we had our explanation on 4 hours time frame, but guys, I like to find an entry in smaller time frame. The entry in smaller time frame, maybe 1 hour or 15 minutes. I like using 1 hour for entry and 15 minutes for entry. I recommend that. You may do your analysis on 4 hours time frame, but finding an entry, you just go to 1 hour because it's very clear. It shows you exactly what the market is doing. When you go to 4 hours, you can see one candle, but if you go to 1 hour, you can see at least we have this candle here and another one that has just been formed right now. You can see, guys, it's very clear because it shows you that the market has formed another candle which has moved in order to do some retest, or has already started to continue with the previous movement. You can see the market is just going up again. You see, I don't say that this one will just move up like just like that. It might also move down to do a retest at this point, but I'm already in because I'll just put another order. I just put another order at this price here, 1.31911, 1.31. This order will be a pending buy limit order. Buy limit. I just do buy limit at this point, at this price, 1.31911. In case the market decide to move down to do a retest at this point. So if we decide to come down there, I'll be in. But if we also decide to move upward, to continue with the uptrend, I'm already in. So I don't miss opportunity, guys. I don't miss opportunity. This is very necessary. So I found my entry there. Now, where will I find my target, my take profit? My take profit will be at the next resistance. Next resistance is what? Is where will be my what? It's where will be my take profit. So my take profit will be just here, guys. This will be, it's where I'll put my take profit. So my take profit will be at 1.324646, 468. So I just go there and I just look at what where is my order here? So just modify. Where's my take profit? My take profit will be at 1.32, which is my next resistance, 1.32462. So your next resistance, if you're moving from the bottom to the top, your next resistance is your target. Next resistance should be your target, guys. I repeat again, next resistance should be your take profit, and I'll tell you where to put your stop loss. So 1.32, 469. Now, what about stop loss? Stop loss should be somewhere. Remember, this was the peak. The closing price was this one. The closing price of this rejection was this one. Closing price. This was the peak. If we take consideration of the shadow, so my stop loss should be somewhere below the closing price of rejection. The closing price of rejection on that resistance. Guys. So I'll put my I'll set my stop loss somewhere here. Why below this? I want to put somewhere below, because the market will come to do a retest at this point of the market, or at this closing price of rejection on the neckline. So I'll put my stop loss somewhere below there, at least 25 pips, from my end. So this is 1.31741. 1.31741. So I modify my order, then I'm done. So here is my take profit. My take profit is here. My stop loss is here, 25 pips away from my end. So I'm done. So this is how you just trade using support and resistance. So remember, just consider someone who never knew about chart patterns or W patterns or any other patterns. Just consider a person who never know about this, but only know about the support and resistance. They will be doing the same thing. You see, a person who just used the support and resistance will be getting a buying opportunity. A person who just watched it, who just entered the trade just by looking at the reversal pattern, the reversal chart patterns, W patterns, without drawing support and resistance, also got it. You see, so it's the same thing. We might be using different approach to the market, but we are doing the same thing, guys. You can just use support and resistance and still make it. The only thing that you need to know is the right way to use support and resistance. That's it. You don't need to draw a lot of stuffs out in the chart. Just a few things: support and resistance. You get it. I'm not saying that the other things are not necessary. They are necessary because the market keeps on changing. You might see the market today be obeying support and resistance, but tomorrow it's another issue. Why are we having a lot of strategy? Because we need consistency. We are looking for consistency, and that's why we have a lot of strategies. Why? Because if support and resistance is not working, you just go to the chart patterns. If chart patterns is not working, you just go to the moving average. If moving average is not working, you just go to other stuff, market makers codes, market makers method, and so on and so forth. But the best way to do it is to combine all of this, and it will be much better for you guys. It will be much better for you guys. You see what I mean, guys? This is very important. This is very, very important. It's very important, guys. It's very important. And I believe if we are able to do this, we'll be able to reach far. I hope by now, guys, you already know how now to set your stop loss, and you already know how to set your take profit. Take profit is next resistance. Stop loss below the previous support, somewhere below the previous support, at least 25 pips from the support. So you can set your take profit TP1, TP2, TP3. So this is how we find take profit, TP1, TP2, TP3. Because why? Because the market will behave on these levels. The market will behave on those levels, guys. So it's very important for you to consider those levels. All right, guys. So this is how you trade. This is how you trade. You trade using support and resistance. How to draw support and resistance, we are done. How to use support and resistance in trading, we are done. So you just modify it yourself in a way that can suit you. You can just do it on your own. But the most important thing is to get the basic how to do it. So right now you know how to draw support, how to identify and draw support and resistance. Right now you know how to use support and resistance in trading. If you have a problem with that, let me know if I proceed in the next part. Because if I proceed in the next part, it will be something huge, guys. Because what we are going to learn in the next part is something huge. Number 3 is how to identify support and resistance using Fibonacci retracement and extension. Guys, this is very interesting. I tell you, this is very interesting. Before I proceed about Fibonacci retracement and extension, let me talk a little bit about it. Let me talk a little bit about Fibonacci retracement and extension. Fibonacci retracement. All right, guys. These are my notes. I prepared it 3 years ago. 3 years ago, and I've taught over 2,000 people with these notes. So it's something that is very powerful. Fibonacci retracement and extension. So let's stick on Fibonacci retracement. What is it? This is a very popular tool among technical traders and is based on the key numbers identified by mathematical Leonardo. We go back into 13th century. There was this guy who called Leonardo Fibonacci. Leonardo Fibonacci was an Italian mathematician. He was an Italian mathematician. He was a genius. In fact, he received Nobel Prize on mathematics. Nobel Prize on mathematics. Nobel Prize on mathematics. He just worked on this thing he called finding the numbers which can measure everything. And on his project, he was able to identify these numbers. He identified he discovered the sequence of numbers that we're going to use them in the Forex as well. These are the numbers: 0, 1, 2, 1, 0, 1, 1, 2, 3, 5, 8, 13, 31, 34, 55, 89. So this is the sequence of numbers that these guys discovered. But these numbers are not just numbers. There is a way, if you take one number divided by the another, you get a certain ratio. And the ratios that you are going to get are the ratios that we find in the Fibonacci retracement. For example, the ratios are 23.6, 38.2, 50, 61.80, 100. But the ratios that are Fibonacci ratios are 23.6, 38.2, 61.8. 50 is not Fibonacci ratio. 100 is not Fibonacci ratio. But 23.6, 38.2, 61.8, those are Fibonacci ratios. How did they get these ratios? For example, if you take one number in the series divided by the number that follow it. For example, in the series, if you take 8 divided by the number that follows, divided by 13. If you take 8 divided by 13, you just get this number, 0.6153. And if you find the ratio of it, if you multiply it by 100%, you get 61.8. You get 61.8. So this is how they discovered this ratio that we find in the Fibonacci retracement. This is not our topic today, guys, but if you want to get more about this, I'll just find another time to teach you how they came across, or how they came across these ratios, 61.8, 38.2. For example, for instance, 38.2, they came. You just get it by dividing one number by the number that is found two places in the right. The series. For example, you take 5, you divide by two number by the number which is found two places in the right. You just leave this, you divide it by this, 5 divided by 13, or 8 divided by 21. Remember, 61.8 you get by taking one number divided by the number that follows, 8 divided by 13. But 38.2 you get by dividing the number which is found two places in the right. 5 divided by 13 or 8 divided by 21, you get 38.2 ratio. 23.6 ratio, you get it by dividing one number divided by the number which is found in 3 places in the right. So that's how it is. That's how you can get those numbers, guys. That's how you can get those numbers. All right, guys. So you see, guys, I'm still in the office. I'm still in my office. That's why you can see me just a little bit tired, because I was here since morning. But I'll make sure that I finish this. All right, guys. So why did I say that 50 ratio is not Fibonacci ratio? Because 50 was just placed by the mathematician after discovery of Fibonacci, because they just came to find out that 50 is also a crucial number that should be in the Fibonacci retracement. Also, 100 ratio is also found in the Fibonacci ratio, because it's very important in the market, because what I will explain in a few minutes will help you guys to understand more about 50 Fibonacci and the 100 Fibonacci ratios. All right, guys. So let's get back to our point. Now, so we are going to see how to identify support and resistance using Fibonacci retracement and extension, and from there we'll see what else we can do. We're here, guys. We're here, guys. We're here, guys. It's perfect. So we are just going to remove all these things, all these things, all these things. Remember, oh, what have I just done? What? I put some more. Okay. Okay. All right, guys. So we are there. We're there, guys. Remember, we are drawing Fibonacci retracement, and most of your Fibonacci retracement, you can see. Let me just draw first roughly so that I can show you these levels. You can see, guys, we have 88.6, we have 100, we have 88.6, 78.6, 61.8, 50, 38.2, 23.6. But for you guys, let me just go slowly. Fibonacci retracement is found here on the tool. If you go to the tools, you find it here. It is represented by F, or you can just find it there at the insert. You go to Fibonacci, then you go to retracement. It's the same. So you can just get it from here, or you can just get it from there. So guys, are we there? Nice. Now, after you get your Fibonacci retracement, you just drag it, guys. You see, you just drag it, and if you drag it, you can see the levels. You can see 100, you can see 88.6, 78.6, 61.8, 50, 38.2, 53.6. But I'm very much sure that most of your Fibonacci retracement doesn't have 78.6, doesn't have 88.6. 78.6 and 88.6 are the ratios that I've just added. They are the ratios that I've just added, and they are the ratios that are being used by most traders around the world. So you just add it manually. You just add it manually. How do you add it? You see, you come to this, double click. If you double click, it just shows these dots. Then at the same point, you right click. It shows you a it shows you something like that. Then you go to Fibo properties. After going to Fibo properties, you just see something here. Just drag down up to that point. Then let me do something like this. See? Let me remove this first. Let me remove this so that we can start together. I want to remove this so that, guys, we can start together. We can just start adding them there together. So they are not there. So if I just delete it, I want to start afresh. I just take it and then I come here, just do like this. So you can see 78.6 and 88.6 is not there. So what I do, I just come here, I just double click, then right click. It just gives me Fibo properties. I just go to Fibo properties. Then I just scroll down up there. Then after scrolling down up there, you can see we have this. We have these levels, and this here is a description. So I just come here. You can see here, guys, just below the last numbers. Then I just click there, double click. But guys, make sure you double click until you see somewhere where you can write something. You see? Then you remove that. At this now, you just write 0. We're going to add 78.6 first, but this left side we write in decimal places. 786, and on its right side we write in percentage. 0.8 in percentage. 8.6. After adding 78.6, below it you add 88.6. On the left side you write in decimal places, and on its right side you write in percentage. See, guys? So after that you just click OK. So if you click OK, it just show you there. So you can see 78.6 there. Sorry, and you can see 88.6 just there, guys. So this is 88.6, this is 78.6. So your Fibonacci retracement is now complete. Your Fibonacci retracement is now complete. Now, after you're done with this, guys, the next part is now how to draw. The next part is now how to draw. Okay, how do we draw Fibonacci? How do we draw Fibonacci retracement? How do we draw Fibonacci retracement? How do we draw Fibonacci retracement? We draw Fibonacci retracement from the peak to the trough, or from the trough to the peak, heading where the market is going. You see, guys? For example, here, since this is a downtrend, the market was moving down, and since we are looking at the buying opportunity, so it's obvious that we'll draw the Fibonacci retracement from the peak, from where the market started dropping, to where the market made a reversal. The market made a reversal at this point. So we draw from the peak, from where the market started dropping, to where the market made a reversal. The market made a reversal at the support, this line here. So you can now see, guys, something strange, something very strange about Fibonacci retracement is these lines, these ratios, these levels will just pass exactly where there is rejection. Remember when we drew support and resistance, we drew support at this point. We drew also at this point as a resistance. We also drew at this point, somewhere here. We also drew at this point. And at this point. Now, let me show you something remarkable about Fibonacci retracement. Something remarkable about Fibonacci retracement is if we draw it as it's supposed to be drawn from the peak to the trough, you can see 23.6 just past exactly where we drew our resistance. So these lines, Fibonacci levels, these lines, wherever they are telling you that at this level, somewhere in the previous, there was what? There was either a support or resistance. It depends, you're looking at the market from which point. It depends, you are looking at the market from which area. So it shows you that somewhere in the previous, there was a resistance at this level. If we are looking at the market from the bottom, there was a resistance at this level. Somewhere in the previous, there was a strong resistance at this 50 level. Somewhere in the previous, there was a resistance at this level. Somewhere in the previous, there was a resistance at this level, and this level, and that level. See, guys? So this Fibonacci retracement shows you something that you could not see when we drew support and resistance manually. It shows you something that you could not see when we drew support and resistance manually. Manual support and resistance are this one, the one which we drew. And you can see they do not, they just correlate with what we see on the Fibonacci levels. You see, guys? Now this is powerful. You can see support at this level, resistance at this level. You can see another one at this level. Now, by considering Fibonacci retracement, you can also update your targets that you set when we drew support and resistance manual. You can now update your targets. Maybe your take profit now should not be the previous manual resistance that we drew. You can now set it here. You can now regard this one, 30.2, as your first target, take profit. You can just update, you can just correct your targets at this point. Now you can set this as your take profit. This one as your take profit 2. This one as your take profit 3. This one as your take profit 4. So this is very necessary, guys. It help you to see something very clear, and that's why Fibonacci retracement is very powerful, and many people around the world use it to set their targets and so on and so forth, guys. So you can see how to draw. So remember, we have just drawn it from the peak to the trough. And vice versa is true, and vice versa of this is true. If we are looking at it from bottom, or we drew it from the bottom to the top, it will be opposite of this. But if you consider this one, it will help you also to know how to draw it if the market was opposite of this one. See, guys? Now, I want you also to understand something magic about Fibonacci retracement. We have something we call Fibonacci extension. You can draw Fibonacci extension directly from the package here. We have retracement, we have expansion. You can draw it. But I want to teach you something that you cannot be taught, you cannot learn from many people. You can just learn from me. Something that I've come to realize it works over many tests that I made. Guys, if you draw opposite of this, remember we just drew from the top to the bottom, but if you draw from the bottom to the top, remember this drawing from the bottom to the top is not meant to show you the levels. It's not meant to show you support and resistance. It's meant to show you where there is a strong support or strong resistance. Where there is strong support or resistance. Now, how do you know the strong support or resistance using these levels? Remember, all these levels, the previous levels, all these levels represent support, representing support or resistance. But how do you know this one is strong support or resistance? To know the strong support and resistance from these on these levels, you need to draw opposite of retracement. Opposite of retracement. You draw from the bottom to the top. Remember, first time we drew from the top to the bottom. Now, to identify the strong support or resistance, you draw from bottom to the top. Why do we draw it? We are looking for this. Do you see this railway? The gap between this and this, and the gap between this and this. You see, the other areas, there is no gap. It's bold. There is no gaps. There is no gaps. But here, there is a gap. There is a gap between the previous level and the one which we have drawn opposite of it. And here there is a gap. These gaps show you that these gaps show you that this area here, we have a strong support. And this area here, we have a strong resistance. This area here, these areas, since there is no gap, we do not expect to find a very strong resistance. So for swing traders, this is suitable for swing traders. For swing traders, you might consider to put your take profit here instead of putting here or here and here. Why? Because at this point is where we find a very strong resistance, which means the market might manage to break this point and this point and this point, but to break this point, it's not easy. It's not easy. You see, guys? So this is a magic about support and resistance, but this is a trick that I'm teaching you from my experience. I've been doing this, and this is my experience. And this point here, since this one is a strong support, means that when the market moves down at this point, if the market managed to move down to do a retest at this point, there is huge possibility for rejection. There are huge possibility for rejection, and hence the market will do like this. the market will do like this. The market will do like this. See, guys, this is what I'm talking about. This is what I'm talking about. So if you're a swing trader, you need to understand this. You know, when I talk about mentorship program, this is what I mean. You need to understand these things, guys, because if you understand these things, they will help you more. They will help you guys to be profitable in the market. Look at what the market is doing now. I was just saying the same thing and the market has already responded. You see, it just went down at this point and now it's moving up. It cannot easily pass here. It can manage to move up to this point, but not easily just moving down to the point, up to this point, no. Because we have a very strong support here. Look at this gap and look at this gap. This is a strong resistance. This is what I'm saying, guys. Do you get the point now, guys? I hope you get the point now, guys. I hope you get the point now, guys. I hope you get the point now. So this is what I mean, guys, and this is how we trade, or this is how we use Fibonacci retracement and extension. I have not said all things. I have not said all things about support, about Fibonacci retracement. If I decided to teach you everything about Fibonacci retracement and extension, we might finish a whole month just teaching you about Fibonacci retracement and extension. There are a lot of things, a lot of magic issues about Fibonacci retracement and extension. I cannot finish everything today. And there are people in the world who are just using Fibonacci retracement and extension and they are making profit in the market. You cannot believe this. I tell you why. Because Fibonacci retracement and extension, it gives you two things. It gives you support and resistance. It also gives you targets. Take profit, it shows you where you can set, take profit, where you can set stop loss. You can see the maximum target is this one. You can see if this is how we can use Fibonacci retracement extension. So we have some few minutes left. I want to remove this. I want to use the same pair. Or we can just use another pair. Let me see if I can find another pair. Maybe Euro NZD. Okay, let me find another pair here. Okay, this one is not very good. Let me take Euro USD. Let me take a GBP USD, guys. Okay, let me take GBP USD. Okay, guys, we need to discuss about this. This is very important. Moving averages show us the exactly point where the market is acting. It shows us exactly what the market is doing, the action of the market, and what the market is doing. And moving average are very important to show us dynamic support and resistance. Remember, when the market is moving, guys, especially when the market is trending, the market keeps on making things like this. The market move like this. Guys. Maybe if it's an uptrend, if it's an uptrend, the market will move like this. The market will move like this. See? The market will move like this, guys. So, if we draw something like that, see? You can see this. This point you see here, this point, and this point. This point here and here and here. These are the support. They are called dynamic support of the market. Why? Because they are created at the market move. They are created as the market move. They are created at the market move. They are not fixed. They are moving. They are created, or they are formed as the result of the movement of the market. They are formed as the result of the movement of the market. See? So when you draw something like this, you see these are the dynamic support. Why dynamic support? Because they are below. They are at the bottom of the market. They are below the price. They are below the price. And the point above it is resistance. Why? Because they are formed at the top of the price. They are formed at the top of the price. So they are dynamic resistance. Why? They are formed at the market move. So these are the dynamic resistance, and these are the dynamic support against. It was necessary for me to explain that way, because when we move now, in the next part, we'll be able to understand why is it important for you guys to identify dynamic support and resistance using moving average. Okay, moving average that we are going to use in this part is 200 moving average, which is a very important and a very essential moving average, because it is mostly used in the market, in the financial market, either in the forex or in the stock market. 200 moving average is used more in the stock market to show the strength of the trend, or to show the trend of the market. 200 moving average is important, or is used to show the trend of the market, and it is mostly used in the daily time frame. So guys, let's start by inserting 200 moving average, and the one which we are going to use is not simple moving average. We are going to use exponential moving average. Why are we using exponential moving average? Because exponential moving average is the one that act according to the change of the price. Exponential moving average act very easy, or act very fast to the change of the price compared to the simple moving average. So the one that shows exactly, or the one that shows the correct change of the price, is the exponential moving average compared to the simple moving average. So we're going to use more exponential moving average than simple moving average. So in order to insert that one, you just go to this button there, then you go to trend, then go to moving average, then we just use 200, set it to 200, then there select exponential, then just close, then you can just use red line. Let's use red line, then okay. See guys, this is now 200 moving average. Okay, let me explain something about it. 200 exponential moving average. How is it important in the market? It's important because when the price is below 200 moving average, it is said that the market is in a downtrend. When the price is below, or when the price cross 200, below 200 moving average, when the price cross just below 200 moving average, it is said that the market is now trending downward. As we can see here, the price is still below 200 moving average, which means the possibility of the market to continue with downtrend is very high or is very huge. See guys, so this is mostly used in stock exchange. It is mostly used in stock exchange when it is used alone. When it is used alone, it is mostly used in the stock market, stock exchange market. But when it is used in the forex market, it must be used along with other moving averages. It must be used along with the other moving averages, guys. So since today this is not our lesson, I will not teach more about how to use this moving average, but I will teach you how to draw support and resistance using this moving average. Now guys, this is how you do it. You see this one, you start with daily time frame, you take your horizontal line, you just draw it there. After that, you go to 4 hours. You go to 4 hours. You see 4 hours. If you condense this chart, you can see the one we just drew on. You can see the one we just drew on daily is there. On 4 hours, you just take also horizontal line. You just draw it where at the point where 200 moving average is. Draw it there. Then you just go to 1 hour. Just keep moving 1 hour. You start with daily, you go slowly to the smaller time frame. See guys, it's better to condense your chart when you go to smaller time frame in order to see all lines. This is daily, this is 4 hour. Remember, this one we drew on daily, this one we drew in 4 hour. On 1 hour now, you can see it's here. You just draw it where it is at the point where it is. See, you draw it there. You just keep moving. Just keep moving. Just keep moving to 30 minutes. Just keep moving to 30 minutes. Just keep moving to 30 minutes. You just draw it again there. Just keep moving up to 15 minutes. Up to 15 minutes. Just draw it there. Draw it there. Now, after that, now come back to 4 hours. Come back to 4 hours and now expand your chart. Expand your chart. You see guys, this is how it looks like. Now, in order for you not to mix up some things, you can decide to do something like this. The one we drew on daily, just leave it as it is. The one we drew on 4 hours is this one. Change the color. Change the color of that one. Maybe change it to this color. This is 4 hour. We put it different color in order to know that this one is 1 hour, 4 hour. Okay, the one we drew on 1 hour, this one, change the color maybe to this one. So this is 4 hour, this is 1 hour, and the one we drew on 30 minutes, was this one. So 30 minutes, change the color into this one. So if you see this color, you know this is 30 minutes. And the one we drew on 15 minutes, also change the color into this one. Maybe this one. Change the color just like that. Then come back to 4 hours. Remember, this is what? 4 hours. This is what? 1 hour. This is what? 30 minutes. This is what? 15 minutes. See guys? So if you look at it, you can see why the market is behaving this way. Kwa nini soko limefika? Why the market just moved down to this point, and now you can see the market is going up, because it encountered what? Support. There was a 30 minutes support here. This support here was in 30 minutes. That's why the market is going up. Is now moving up. Is now pulling back. Why? It encountered support. How did we find out there was support here? Because we have this 200 moving average. This 200 moving average on 30 minutes, just there. Now, if you have this, if you draw this, it's very clear that when the market moved up to this point, you could buy. You could put your buying order here and buy with it. If you are a scalper, you'll be scalping like a crazy and you'll be making tons of money. Why? Because you know that the market, if the market moves down to this point, it will reverse. It will make a reversal at this point. Why? Because there is strong support under 200 moving average, exponential moving average. Remember what I said from the beginning? Forex market is mathematically calculated, guys. They know exactly what they are doing. They are not just making a pullback roughly. They are making a pullback here because they know this is a point where they have to make a pullback. Why? Because we have strong support there. Why? Because there is 200 exponential moving average guiding them. They are guided by exponential moving average, 200. They are guided, guys. You have to think like dealers. You have to think like market makers. You have to act like them, guys. This is not something you can find in the books. It's something that you can find from experience, and I'm sharing my experience with you guys. Why? Because I don't want you to lose money. Do you get my point, guys? This is my point. And that's why I charge people 500 USD for me to teach them this. But I'm charging you only 12 USD. And I'm spending my 2 hours here teaching you guys. This is what I mean, guys. And this is what is happening in the market. Not only on GBP USD. Just go to any pair and do exactly what I've just done here. You just get the same result. Let me show you guys. How many pips here? 13 pips. Let's say you are sure about this strategy and you just used one lot size. How much you'll be making? 130 USD. My friends out there, this is how you can make money. I've just shared my secret with you, and this is a huge secret in the Forex market, and simple and huge. I know most of people here are scalpers. I tell you, if we use this strategy to scalp, tomorrow you'll be having a ton of money, tons of money in your wallet. I tell you guys, this is powerful. This is powerful more than atomic bomb. This is powerful more than atomic bomb. Remember, if you go to Google, just go to Google and Google 200 moving average. They will tell you that 200 moving average is mostly used in the stock market. But guess what? I've come to discover that if I use 200 exponential moving average to allocate the support and the resistance in different time frame, it will be powerful more than atomic bomb in the market. Why? Because you'll be making money. You'll be making money, guys, and the market will behave on those areas. Guys, I don't have much to say. Today, it's more than enough. I have given you more than enough. Please make sure you use this strategy to make money. Remember, this strategy, this thing that I've just explained here right now, it is just for scalping. 10 pips, you get out. 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 You'll be making money. Don't hold for too long. 10 pips, you get out. 10 pips, you get out. You're making money. Guys, God bless you. If you have any question, please do not hesitate to ask me.